3rd of March on a Thursday itself. Time now is 3:06 p.m. in Singapore. My name is Dylan and welcome to my daily trade analysis video. Today we're going to touch on only 5 currency pairs, as there isn't really much setups for us to go in for the market, because the market is still anticipating for the non-farm employment change data, which will be held tomorrow at 9:30 p.m. in Singapore. So we're gonna just start off with the euro against the US dollar as well. Let's take a look at the day one chart. In the day one chart itself, we do have seen that the price is finally at the key support level at the price of 1.0822, which is slightly below the retracement level, 61.8%, and that signals for a probable rebound to be happening soon. Into the 1 hourly chart, we can see that the price has been falling, but the current structure itself do suggest that there is a possibility for the price to appreciate, and at the same time for a retracement. So therefore we shall be looking for a opportunity to go for the buy right here at the current price, or as price retrace a little bit, probably at the price of 1.0844 to go for the buy as well. Expected the price to appreciate all the way to at least about I'll put it at 1.0938. So that is still a good about 60 to 70 pips of profits to be made from this trade. Or if not, you can wait for the price to retrace and go for the sell again, the 1 hourly chart. But bear in mind that in the 4 hourly chart, or rather in the day one chart, the price is currently at the key support level. We may expect the price to move into another range or consolidation before we see further trends to form. So that's for the euro against US dollar. Next we have the pound against US dollar. Excuse me. In the day one chart, we can see that the price has begins to appreciate further and retrace further as well. It is about to reach the key support resistance level at the price of 1.4141. So waiting for the opportunity to go for the sell again for the pound against US dollar, as we know that the pound will most likely still depreciate further due to the Brexit, the uncertainties caused by the Brexit itself. So into the smaller time frame, the 4 hourly charts, we've seen that the price is about to reach a key resistance level of 1.4141, which is just slightly below the retracement level of 30.2%. So that is the key level we shall go for the sell. Although right now we do see that the price is finally exhausting, it seems it's about to fall, but we will wait for the price to reach the level that we are waiting for to sell. Alright, so that is for the pound against US dollar, just a little bit more. And Aussie, right now we have the Aussie against US dollar. So in the day one chart itself, we have seen that the price has broke above the resistance level at 0.7239, and it continues to appreciate further. Expected the price to reach the key resistance level at the price of 0.7379, a key resistance level since October 2015. That's about 4 months to 5 months time already. So therefore we are waiting for the price to reach that level again to go for the sell. So into the smaller time frame, we are seeing that the price is has been supported and rebounded off perfectly from a rising trend line. Expected to appreciate further, and indeed it breaks above the top the key resistance right here at 0.7239, continues to appreciate further, waiting for it to reach 0.7379, the key resistance level based on the day one chart, to go for the sell. But there is definitely a possibility that the price may break above the resistance level 0.7379, but we do expect significant retracement right here, which therefore gives us a opportunity to go for the sell. And if possible, we will be looking for the buy opportunity as it touches the key resistance and begins to retrace, and to look for the opportunity to go for the buy and expect it to break above till it reaches the top of the probable rising trend channel, as we can see right here. So that is for the Aussie against the US dollar. Next we have the New Zealand dollar against the US dollar. So again, in the day one charts, we have seen this ascending triangle for quite a number of weeks, and because the price is still moving in the range, still moving sideways, right now we have seen that the price is appreciating right before it even touches the key support level at 0.6551. So right now we expect the price to appreciate towards the top of the range at the price of 0.6747. And into the smaller time frame for hourly charts, the price is clearly seen trading in the range, as you can see right here, between the price of 0.6747 and 0.6551, and price is appreciating towards the top of the range at the price of 0.6747, which may give another which may provide another opportunity to go for the sell. We don't know if it will break if it breaks above, but if it's at the top of a range, we shall look for the opportunity to go for a sell. But again, bear in mind, in the day one chart, we do expect the price to appreciate towards the top of the ascending triangle at the key resistance level at 0.6879. Therefore, there is a possibility it will break above. Therefore, as it reaches the top of the range, we can go for the intraday sell, and again look for a opportunity to go for the buy as it retrace, and wait till it breaks above the top of the range and towards the key resistance at 0.6879. So that is for the New Zealand dollar against US dollar. Alright, last but not least, the Aussie against the New Zealand dollar. Since we're talking about Australia dollar and New Zealand dollar, right now we can see that Australia dollar is about to hit the key resistance level. New Zealand dollar similarly is about to hit a resistance level as well, but that is not as key as the Australia dollar. So we may expect that the price that the Aussie will depreciate against the New Zealand dollar probably in the next few days, these 2 days, or towards next week. So we are looking for the sell opportunity for the Aussie against New Zealand dollar. But before that, in the week one chart, based on the structure that we have right here, if you know, and if you want to call it an inverse head and shoulder, we expect the price to appreciate further. Alright, so into the smaller time frame, based on the 4 hourly charts, we are seeing that the price is right now resisted at the previous resistance level at the price of 1.0967, and it's about to touch the top of a rising trend, probable rising trend channel in the 4 hourly charts, and it begins to push back as it touches the resistance level. Therefore, waiting for an opportunity to go for the sell. So right now we are either we're going to be selling it at the current price, or we shall wait for the price to retrace to appreciate again to the resistance level at 1.0967, and to see if there's an opportunity to go for a sell at a better price right here. Or if not, we may want to just wait for the price to retrace all the way to the bottom of this minor rising trend channel that's based on the H1 charts, the 1 hourly charts, to go for the buy instead. Again, because we are expecting the price to appreciate further based on the current structure that we have in the weekly chart. So with that, I've come to the end of today's trading analysis video. So thank you for watching, and see you tomorrow. And do remember that tomorrow is the non-farm employment change.